All right, good evening, everyone, and welcome to our Billionaires weekly meeting or webinars where we have a heart to heart and talk about our trading. And we also look at, we get some of us who are already in the business, who have had a couple of experiences to share their wisdom with us. So, Billionaire Kelvin will be sharing with us shortly. But while he's getting prepared to join us, let me just show us some things on the chat as well. So let me share my screen, allow share screen, and okay. So we want to talk about, what do we want to talk about? Oh, let me turn it this way first so as to get. So I want to say, well, just something about what kind of trader are you? Are you that trader that is looking for, every little step, every little movement of the charts? You're looking for to either buy or sell, right? Oh, something is happening to my chart. It's freezing. Okay, let me reshare. Sorry, I'll need to reshare the screen. It's not. Sorry, the screen was frozen, so I need to restart that trading view app so that it won't okay. Okay, so the question is, what kind of trader are you? Are you that trader who is trading, say, the 1 minute chart, the scalper that is just looking for the thrill of the market, just every market movement? You just want to get every market movement, or are you that trader that just wants to take it nice and easy, nice and steady, without a lot of stress? Let's put it that way, without a lot of stress. So I want to show us where is my. Okay, let me take the trading view now. Okay, so this is trading view. So look at okay, this one is even too this one is very nice. Okay, well, let's use this first. So this is the 4 hour chart. So if you are someone who wants to take the things easily, you want to take it one step at a time. You don't want to rush your trades. You just want to enter your trade and then you want to see it, develop and mature and get into preferably go into profit. So I just want to look at what happened last week. Where is Monday? Monday, yes, this is Monday's this is Monday's so it starts from somewhere here, last week Monday. Okay, so one of the thoughts, or one of the established rule of thumb is that for whatever kind of trading strategy you have, for whatever kind of trading strategy you have, if you are trading it on a higher time frame, you will get less signals. However, those signals you get, majority of them would work out. So if you're using, say, a moving average, for instance, before a moving average, let's say you're using two moving averages, let's say the 20 and the 50, or maybe 50 and 200, for instance. And by the time you put it on your chart, it will take a bit longer for that chart to cross them if it's on a higher time frame. I like using engulfing candles, so let me just use that as our example. Now, let's say you just look at this. You're waiting for an engulfing candle, and then you see something like this. Let's say a clear one. So this big candle here was eventually engulfed here. Okay, last week. That was last week, right? So what did we get? So we got this sells here, sell signals right there. Okay, now, and that went on and on and on until maybe the next clear engulfing candle is probably somewhere here. Okay, and then of course there was this one as well, but it okay, no, well, this one was last week, so let's keep this one. We'll keep this one out because this was the last candle for the week, last week, so maybe nothing will have happened that much on it. But you can see that the clear engulfing candles you get are less. So if we go to say a 15 minutes chart and look at between last week, where are we? Okay, between last week and today, and in fact, let me just put what's it called now? Let me put an engulfing indicator. Where is that indicator now? Okay, let me turn it this way so I can put in the indicator. There's an engulfing indicator I like to use, engulfing candles. Okay, so we'll go back here. So we're on the 15 minutes chart. So look at between from Monday last week, look at the number of engulfing candles you'll have gotten each day, right? You'll have gotten so many more engulfing candles on each day. So this is Monday. You'll have had like 1, 2, 3, 4, 5, 6, 7, both buys and sells, right? And then on Tuesday too, you'll have had something similar. 1, 2, 3, 4, 5, 6, 7, 8, 9, like 9 sets, like 9 different signals. But if you compare that to your higher time frame, okay, you won't get that many, right? In fact, according to that setup, you only have one. But when you use my own type of systems, my own students know that kind of the systems we use. So when the kind of engulfing candles we use, you will get less signals, okay, and that means that you are able to the signals you get on that higher time frame, most of the time those signals work out. Okay, when you get to the lower time frame, it gets harder. Please kindly unmute, kindly mute yourself. Let me see. You just kindly mute yourself, and then we'll, so that it won't disturb the others. Thank you. So so the higher time frame gives you less signals, but the signals are more, they have higher potentials of hitting their targets compared to, say, when you go to a lower time frame, like a 15 minutes chart, and every day you're just on each signal, you're buying, you're selling, you're buying, you're selling. Look at this, look at what happened today now. You buy here, and then it gets stopped out, you sell, maybe you win a bit there, and then you buy again, you get stopped out, and then you sell, right? So you're just buying, you're selling, you're buying, you're selling, you're buying, you're selling. Okay, just looking at engulfing candles now. We're just looking at engulfing candles. So you need to put that into your trade plan to say that how best is it for me to trade without putting more stress on myself. Would it be better for me to say, okay, if I really say that I must trade lower time frames, I will say to myself that I would like to combine my signal from the higher time frame. Okay, I would like to combine my signal from a higher time. Is someone asking a question? Can't hear. I can't hear properly. Okay, let me mute the person so that we can understand what we're saying here. Just a sec. Okay. All right. So we want to consider that if we are trading a lower time frame, or if we insist that, okay, I just want to trade the lower time frame, then you have to put in mind that you can adjust your trading, your trade plan, such that, so a possible trade plan that you can put for yourself is to say that, okay, I will trade engulfing candles once I see the signal on the 4-hour chart, for instance. Then so look at this. Let's move this man here now to this engulfing candle here. So that candle closes, right? It gives us an engulfing candle. So once that happens on the higher time frame, we can then say, okay, I will go to a lower time frame like the 15 minutes chart and then trade in the direction of that engulfing candle from the higher time frame. So for instance, what we've just done now, we've marked where that engulfing candle closed, and then all we can now do is to, we see a break of structure to the downside, we wait for this pullback, and then we just enter right there, right? So that way we are not entering on every engulfing candle that we see on a lower time frame, but we're only entering on the signals based on a higher time frame. Okay, so that way we can build our accounts, we build our confidence, and then we also build the capacity or that potential of getting more wins than the losses, or better still, put another way, our wins are the potentials can run a bit further than when we just place every buy you buy, every sell you sell, and then you just be going up and down, up and down, up and down, giving yourself a lot more stress. Okay, is Billionaire Kelvin in now? Please kindly let me know once you're in, so we can then look at other things. Okay, so that is that about joining what you have on the higher time frame to taking the setups on the lower time frame. That will give you an easy kind of setup. You won't have to be taking every trade, and then you won't have to be doubting whether that signal is going to work out or not. So that is very important, looking at the different time frames and the kind of setups you get. Now, the other thing we want to also emphasize is the fact that the markets, when you're trading your forex your forex account, or the prop firm account, whatever account it is very important to be consistent. It's when you are consistent with a process, with a particular strategy, that is when the market will pay you. So like they say, there are 1,001 ways to get to a market. Okay, so physically now, or to get to any particular destination, there are 1,001 ways to do that. Okay, the same thing in your trading. If you are using engulfing candles, stick with your engulfing candles. If you are using moving averages, stick to your moving averages. And why do we say that? Now, for every strategy, there are ebbs and flows. There are times it peaks, and there are times it goes down to the troughs, right? So it does like a signal attenuation, right? You will get times when it will go up, when all your trades, you're just taking them and it's just working out. And then there are some times you will take your trades and then you just be getting stopped out consistently, right? You can get like 3 stop outs in a row, or even 5 stop outs at a go. Okay, so those for every signal, for every type of strategy, just those engulfing candles until you see a nice sizable chunk of the until you get a nice sizable chunk of the market every time you trade. Okay, so whether you trade on a weekly basis or you trade on a daily basis, right? So that you are consistent over time. Is that consistency, okay? Is that consistency that will help us at the end of the day? Let me, I'm seeing, I'm hearing some echo. Okay, I'll stop sharing this one and then share the other screen. Okay. Billionaire Kelvin, are you in yet? I just spoke with him. He said he will be in less than 5 minutes. Okay, can we see my screen?
Yes,
Just put
sir.
in the chat box. If you can see my screen, just type a 1. Okay, good, good. Thank you, sir. So we're talking about differences between higher time frames and lower time frames. So once you are able to stick with one process, you become consistent with that process. And then with that, particularly when you're just starting out, okay, or even if you've been trading before, but you are not seeing that consistent win. All right. And then when I talk about win here, I'm saying that you have a trade plan and then you follow that trade plan. So whether the outcome, the specific outcome of that particular trade was a win or a loss, you know that you followed your process. So that is a win. As long as you follow your process, that is a win. So it doesn't matter whether it actually was a winner on what the outcome is. Okay, we're not looking at the outcome here. We're looking at the process. Okay, so we're saying that if you are able to then take that process and then you are consistent with it, that is when the market pays you. Okay. Then the other thing as well is that you don't need so many charts. You don't need so many pairs. I see some people trade like 25 pairs, some trade 10 pairs, some trade you don't necessarily need all those pairs, particularly when you're starting out. Just take one or maximum two and then follow the setup of those two. So if you're only trading London session, stick with your London session. If you're only trading New York session, stick with your New York session. If you're trading only, what's the other session now? Who remembers what's the other session that is common, that is popular?
Asian.
Asia session. Thank you very much. Right. So you're all following me. Thank you very much. So if you are trading only Asia session, stick with that Asia session. And if you have if you are fortunate enough that you are in a particular region where you can trade in between these various sessions. For instance, if you are around is it okay, like Nigeria, for instance, now those in Nigeria can be flexible. You can trade a bit of the Asia session, a bit of London session, even a bit of New York session if you have that time. Unlike the person who is, for instance, in the US, and then if they want to trade London session, they'll have to wake up like in the midnight, to trade London session. So depending on where you are, decide for yourself which sessions you are going to trade. And then once you have that, you then stick with that process. Okay, I want to see if I can bring up, where is my pound USD? Pound USD. Do I not have pound USD on this chart? Imagine. Okay, let me bring it up because I want to show us something on pound USD. Pound. What's happening? I can't find pound USD here. Oh, okay. Let me type it in and see if it will come up. Aha, good. Let's see. So beautiful, good. Now look at this. This is the 4-hour chart, I believe. Yes, so this is the 4-hour chart. So this is what happened last week. Okay, we see price started out from somewhere here, went all the way up, then eventually broke structure, came all the way down, then tried to go up, came back down. Then today, it just moved very nicely up. Okay. Now, oh, okay. Sorry. This is not, is I want to do pound yen. Okay. I'm actually in this one. Okay. So I want to look at the 15 minutes of this, I'm trying to contrast now between trading so many pairs, okay, and then focusing on maybe just one or two. Now, usually your yens, you expect your yens to move together. So pound yen, euro yen, USD yen, all those things with yen, you expect them to move in the same direction. Now, so this morning, look at what happened on, this is GJ now. This is pound yen. Pound yen started out from there, broke structure here. This is during Asia session, broke structure, pulled back in. So we're expecting it to come back in here and break this structure. But what happened instead, price then decided to break this upper structure here, which then forms a market structure shift. Okay, so I got to the charts around this when it happened around here. So I then placed this trade and then went up with it like this. Now let's look at what happened on euro yen. Euro yen, on the other hand, what did it decide to do? Look at euro yen just decided to go the other way, right? So it actually broke structure a bit there. It came back in, pulled back up, and then broke structure to the downside, right? So I was actually expecting, because pound yen was going up, I thought, okay, euro yen too will go up. So I had a small entry somewhere there. I had my stop loss down there. So I had a small entry somewhere there, expecting euro yen to go up. But then lo and behold, what did he go? He decided to go down and stop me out, right? But that was fine. I just said, okay, that's fine. But I want to contrast so that to see that when you have so many pairs, you then have to be taking so many other decisions because you expect certain correlated pairs to move together, right? So what's this other pair now that we're looking at earlier? Pound USD. So pound USD was moving up very strongly, and that probably also made pound yen also move up. Okay, pound yen that we saw earlier. And pound USD actually did a very nice setup for us today. If you traded pound USD, you'll have just come to your chart. This is Asia session. You'll have just seen that, okay, there was a break of structure, a nice pullback there. It did not break the lows there, gave you a nice lower high, went very nicely up, then gave a very shallow pullback there, right? You will have been expecting this pullback if you are following our kind of setups, the kind of trade setups that we teach, right? So it gave a nice pullback, which you'll have entered somewhere, put your stop loss somewhere there, and then you'll have gotten some of that, right? So this gave us a nice setup. Now, there'll be days when these kind of things will not work so well. Okay, look at, let me see if I can get a day that the thing did not go so very well. Okay, look at this. This was a few days ago. Just to show you that every system, no matter the strategy, every strategy does have its pitfalls. It does have times when it will not work out the way it's supposed to work out, right? So you see price come all the way down, right? You're looking at your valid range and said, okay, this between these highs here and these lows here, you're looking at to see if price will go further down. Instead, it meandered and then came back up and broke this structure here. Okay, then you say, okay, let me enter a buy. So you enter a buy there, put your stop loss there. The thing just goes a few pips. And from there, what did it do? It came back down, stop you out, and then eventually go back up. And it didn't even go that much, right? Now, another person who is using another system, maybe he's using moving averages. Let me see if I can get one with moving averages. Let me see. Okay, let's put that. This one is aha. So look at that. It has some moving averages on it. So another person will come and say, oh, in fact, this is too many moving averages. Let me not put that one. Let's look at this one. Just one moving average. Okay. All right. So let me look for, where were we that time? Okay, I think it was here.
Wow.
Okay, you're welcome. So let me just wrap up and then you will take over from there. Yeah, so this one, you know, with your moving average, you enter your sell there and then it goes down. Then you enter your buy here, it goes up, comes back down. Maybe you enter another sell there. You know, so you are just going up, down, up, down, up, down, up, down. Every system has its own times of winning and its own times. So it's always good to stick with one. Okay. Beautiful. So is Billionaire Kelvin here now? Great. Okay, so I'll hand over to you. So just hold on. Let me make you co-host so that you can then take over.
All right. I must come back. I just wanted you to conclude. That's why I did not interrupt.
Okay, I've made you co-host and you can take over now.
It's all right. Good evening, everybody.
Good evening, sir.
Good evening. Okay. Are you hearing me?
Yes, sir.
Yes, we are.
It's all right. I want to start from one of the points that Jeremy made. Looking at too many pairs. Let's start from there first. You see, from experience, when you look at more than 3 or 4 pairs, is going to give you a kind of psychology and emotions that will help you to contradict every now and then. Now, when you now narrow down to like 3, it will help your decision to be a bit stable. But if you now come down to 1 or 2, then you know that your decisions will be better off. Are you hearing me?
Yes, sir, we can hear you.
Okay, so your decisions will be better off. So personally, recently I have narrowed down to 1 or 2. In fact, 1. Then worst case scenario that I don't have a setup, I cannot say, okay, let me look at the other one. Otherwise, I have narrowed to 1. With that 1, your psychology will be very balanced. Your decisions will be very balanced. I don't know if anyone has similar experience, so that let's hear from that person about this before we proceed. Hello, Jeremy. You can share your own experience too, Jeremy.
In fact, that was why I was showing us pound yen and euro yen today. Pound yen was initially going up during London session. Meanwhile, euro yen was going down. So you will sit down, and then that actually affected, because I just told us now, I was expecting both of them to go together. So while I was in a buy on pound yen, I decided to place a buy limit as well on euro yen.
On Euro US, yeah, you see now.
Yeah, because I was expecting euro yen to go up with them, you know, and then euro yen decided to go the other way. So
Now, now,
that's the thing. It's better to just stick
now,
with one.
now, if you want to do more than one and they are USD pair, they use the dollar index to do the balancing. In the sense that if your dollar index, I'm trying to load my trading view so that we can see all these things, but it's very slow because I've not opened my system since yesterday. So thing is slow. So like I was saying, if you want to do that, use the dollar index to do the balancing, in the sense that if dollar index is coming down, you know Euro USD will go up and GBP USD will go up. But if dollar index is coming down and Euro USD is not going up and GBP USD is not going up, do the one that is doing the opposite of the dollar index. In other words, if your dollar index is a buy and Euro USD is selling, it means Euro USD is not order manipulation. But if your dollar index is a buy and your GBP USD is buying, it means your GBP USD is order manipulation. So you have to ignore GBP USD buy and follow Euro USD sell. That is the way to get it better. Hello? Are you hearing me?
We
Okay,
are
I'm not
with you,
talking
sir.
to myself.
Yes, sir, we can hear you.
Okay, so that is the way to get it better. If you follow it that way, you always get it very right. Now, I'm trying to load my chart so that we can see the real example, but it looks as if this stuff is slow. Maybe I will open MT5 first. You can get it from MT5 first, no problem. Maybe I wanted to use. So now, how many of us did the practice of sweet point validation? Hello.
Come again, sir.
What we looked at last Monday was the sweet point validation, how to get a valid reversal point. Do we remember? I did show us some examples.
Good evening, sir. Are you talking of the one that you take your trade from the day, looking
Yes,
at the previous day,
yes, previous day, then you go to a lower time frame,
5
then
minutes
use
time frame?
use the key zone, then make sure that you are considering
Actually, I tried it out. Unfortunately, I'm confused setting up
indicator.
the key trade zone.
Because you will have messaged me, and I said if any of you is having any challenge, message me. I will open it again so that we'll look at the settings. This thing is
Okay,
slow
sir.
loading, slow loading. The network, I don't know. Anyway, Flow is worse. I'm using MTN. I don't know which of them is going to. I can't find my Airtel modem. So I'm sorry, it's network. Okay. I think let me start sharing my screen. Hello? Is my screen coming up now?
No, sir.
The screen is trying to come up.
He's trying to come up.
It's slow.
Please, let's just bear with network. Let me stop and start it again. Maybe. No.
Oh, is the laptop still trying to boot up? Oh, crumbs. I think Billionaire Kelvin has dropped off. So in the meantime, let's see what can we do. Okay, so let me see what we have here. It's always important to build confidence in your trading. Okay. And part of the things to help you build that confidence is when you have a clear plan, because your mind will always tell you, your mind is always looking for whatever you feed it. So if you're, I like using the example of somebody who wants to become a doctor. And then he says to himself that, okay, I believe I can become a doctor. He says that to himself, and then his brain begins to search what are the requirements to become a doctor. The brain will just be looking for solutions everywhere. The same thing with our trading. When you say you want to be a professional trader, okay, your brain will be looking for clarity. Your brain will be looking for clarity. If you are not clear in the way you trade, then your trading, your account balance will not balance. Your account will not grow. Your trading will not grow. Your trading business will not grow if you do not have clarity in how you want to trade. Okay? And that's why I always tell our people that when you're trading, you need that plan. You need that trade plan. So the person who wants to become a doctor says to himself, I want to become a doctor. Then the next thing he does is that he begins to look for institutions where they train doctors, because the person then finds out that he needs to be trained. Besides being trained, he needs to qualify and get the license to train, I was going to say to work on other human beings, but that's what they actually do now, Abby. That's what doctors do, right? So he needs to get certified. He needs to get the license to be able to dispense medical advice and medical to work as a medical personnel, right? So he goes through those processes. He sees the things he needs to do. He's clear about it. The same way when you're trading, you must be clear about it. And one of the nice trick that you need to have, or one of the nice things you need to have, is that having that clarity and being consistent with that clarity, having a repeatable process. Because your mind, once your mind, so if for instance you are driving, you're learning, you're at the early stages of learning to drive. At the initial stages, you're doing so many things at the same time, right? You're saying to yourself, oh, I hope I'm holding the steering well. Oh, I hope I'm looking at the inner mirror, side mirrors. Oh, before you trafficate, okay. If you are driving if it's a shift gear, if it's not an automatic gear system, you say, okay, you want to press your clutch, there's so many things going on in your mind, and you want to ensure that you are taking those steps, taking those steps in the right order. Okay, so the same way for the person who is just starting out, make it as simple as possible. Make it as simple as possible for yourself. Be clear about it to yourself that, okay, if I'm trading, say, engulfing candles, I'm just sticking with engulfing candles, and anywhere, whether they wake me up today or you're doing something else, and then somebody tells you, is this an engulfing candle or not? You can say it immediately because you are clear in your mind. So your mind needs clarity. That's part of the trader psychology things that you need to know. You need clarity when you are trading. Don't jumble so many things together. Don't put so many indicators, and you're following somebody on social media, and you're doing so many things at the same time. There won't be clarity that way, because your mind, if you do that on one day, and then you place those trades, and then those trades were a win, by the time you come the following day, do you get those same things again? Right? So it has to be something that is repeatable. That is very, very key when you're trading. In your trading account, you have to have a repeatable process. At all times, it has to be a repeatable process. And if it's not a repeatable process, then you cannot be consistent. Okay? If it's not a repeatable process, then you will not get a consistent result. Because the way the thing works, if I remember the formula now, when you execute your trades, what's the other word now? I've forgotten it's been a long time I actually did it. It's what's his name? Jack Canfield. He talks about E plus I equals O. Those who have read principles, something life's principles, also one of the books he did, Success Principles. This is the entry or the event, right? The event plus your E plus R, the event plus your response will give you the outputs, right? That you desire. So the event is something that happens to everybody. So for instance, if you say, I mean, now, right now in the world generally, it's said that there's a lot of economic crunch. Things are a bit more expensive and all that, right? So that event is general to everybody. Okay, so that event is not specific to you. You can say, oh, the government is not favoring me. Oh, life is unfair to me. This and that and that and that, right? All that is common to everybody, right? Everybody has one issue or the other. So that is an event that happens to everybody. So that is common. Now, the only difference that would happen to these outputs that you're looking for, i.e. your profitable trading or your account size increasing, the only thing that will make that go up outside this event here is your response to it. Right? So when you make this your response very simple, if you say, okay, I'm only going to be trading engulfing candles. So no matter what the price action is doing, no matter what indicators or what any other person is saying, you are sticking with a clear process. You are sticking with a clear process. So your response, and your response is repeatable and it's occurring anytime you come to your charts. You know the time is occurring to you on your chart. Okay, so you just follow that process consistently. It's when you do that over and over again, then your output, you begin to see good gains. And in fact, okay, I didn't ask for permission from one of my friends. We were discussing earlier today, and this my friend got a signal from somebody that we follow, and so that person was saying, okay, this thing, you should buy this particular pair. So this, my friend, looked at it and thought, well, that was that person's process. When they looked at it, they said, oh, this thing is actually breaking structure to the upside, so I'm not going to sell, right? So they have their own process. So everybody has their own processes. So don't just follow everybody. Stick to your own process, right? Stick to your own process. It's very, very important. Stick to your process. That way, you then develop confidence. You see that your mind becomes more and more confident in what you're doing. So, you know, people say that whatever you put your mind to, that thing will eventually become manifested, right? So if you say, okay, I'm a millionaire, it's not just for you to be declaring, making confessions. No, confessions is part of it, yes, right? Confessions is part of it, but it's not just for you to sit down and be saying, declaring, oh, I'm a millionaire, I'm a millionaire, I'm a millionaire. Your brain yourself will be telling you, are you sure you're a millionaire? That see your bank account. I'm not seeing millions in your account. So where is this your millionaire coming from? So your brain yourself, your own mind will be fighting you. It's a mindset thing, right? So what you need to do to actually manifest that is to say to yourself, just like the person who says, I want to become a doctor, right? You say to yourself, I am a millionaire, right? Okay, that's a statement of fact. You've said that to yourself, I am a millionaire, right? So what are the actions you begin to take? So are you consistent in the way you trade? Are you using a repeatable process, right? Are you using proper risk management? So those things are the things that you then do. So when you're using a repeatable process, you're using a consistent process. So it's repeatable, it's consistent, and you're using proper risk management, right? So when you do that over and over and over again, by the time your mind begins to tell you, are you sure you're a millionaire? You tell your mind that, yes, I am in the process of manifesting my millionaire status because I'm using a repeatable process, a consistent process, and I'm using a proper risk management for my portfolio. You see the mindset shift, right? So just like the person say in other business world, the person says, I'm a millionaire. And then what does the person do? Okay, Nigeria here will spend naira, right? So the person gets 1,000 naira. Instead of spending that 1,000 naira, he decides to invest that 1,000 naira, maybe in shares, for instance. Then another day, 10,000 naira comes in. Then the person says, okay, I'll take 5,000 out of this 10,000. I'm going to invest it. Maybe he hears about a business somewhere that he can do, like some of these US stocks that you can buy. You can buy some just units of it, a fractional unit of those things. So that person is investing, right? And then he's confessing to himself, I am a millionaire, right? So when the mind then comes up to say that, are you sure you're a millionaire? This person will have proofs. They'll say, yes, I believe I am a millionaire and I'm in work in progress to manifest it. So it's first within before it comes out on the outside, right? So the person can then tell his mind that, look, I've invested in XYZ. I've also done fractional shares in XYZ, so that when the dividend of those things come in, when the return on investments come in, I can see improvements, right, in my account. Right. And in fact, one of the things I heard one of my mentors say one time is that you can have your account, don't look at your the balance in your account and use that to judge yourself as to whether you're a millionaire or a billionaire or not. Right. Because your account is only a temporary reflection of what is about to happen. Right. And this thing has to just keep flowing. It has to keep flowing. somebody used an example of somebody who wants to travel out, right? You want to travel to Dubai. Okay, you have not yet gone to Dubai physically now. You have not yet gone to Dubai, but in your mind, you have already traveled to Dubai. And then at the appropriate time, you buy your tickets, right? You get the visas and then all that, you buy your tickets. But what happened first? It was in your mind first. It started with a desire. Oh, I want to travel for vacation to Dubai, right? It starts in your mind first. The same thing for monetary things, for forex trading that you're doing. It starts in your mind first. Say to yourself, I'm a profitable trader. I'm a consistent trader. I follow a repeatable system. I follow proper risk management, right? Once you put those things in place, then it becomes better over and over and over again. I see Billionaire Kelvin is here now. Are you able to take over now?
Okay, let me start sharing my screen. I pray that the network will not.
Okay.
Okay, the set sharing is not turned on. So it's
okay,
like you make me a co-host first.
Yes, okay. You're good to go.
Okay. Let us pray that we'll have good network like last week. I see my screen now.
It's coming up. It's not up yet. Okay, we are seeing it now.
All right, so let's go back to. Quickly, we'll go back to the. For those of us that were struggling on how to get the indicator, you come to indicator, click on indicator. Then you type key zone box. Key zone boxes by Brains WH. I already have it. Are we following? Huh?
Yes, sir.
And then you click, then it will appear. Once you have it here, this is the two boxes. Then come to the setting. Just watch my cursor. This is the setting. Click on setting. Go to input. London key zone open. New York key zone open. By default, from now till around November, we're having 1 a.m. to 5:45 p.m. as our London key zone. Then 7 to 10:45 as our New York key zone. Then the height of the bus 5. And you say, okay, that is what you need. So you can write this thing down. Say London 10.002.05.45 London. Then 07.00 to 10.45 New York. Bus height 5. This is the only thing that you need to set up the key zone bus. Are we in order? Hello?
Yes, sir.
Okay,
Yes, sir.
so
It's just that we did
so
not mention whether it's PM or AM.
set the time the way it is. It is not showing AM or PM. I told you people that time is UTC. That time is the synchronized time with the brokers and the liquidity provider. So it's UTC. Are you hearing?
Yes,
Yes,
sir.
sir.
Okay, so that's just the only settings for the key zone. So right now, let me remove my drawings. We will go to the daily time frame and use the daily candle of today to know how this thing worked. Now, this is Friday 25th candle. This is Monday. What I said that day is mark the low of your previous day candle and also mark a high, which also happened to be the close here of your previous day candle. Now, let me remove this. From this point to this point is a range. This range is what will determine how we will trade on Monday by the end of last Friday. I've not been online, but if I was to trade today, are you hearing me? Hello?
Yes, sir. We are with you. We are with you,
If I
sir.
was to trade to this morning, I've been on transit this morning, just returned. If I was to trade this morning, we had the best clean A+ setup. A+ setup this morning. This was the range. If you go to 5 minutes time frame now, if you go to 5 minutes time frame, you discover that the key zone highlighted that time. Okay. Are we seeing something here? Huh? So after marking the daily range, I said, take note of the swing point before the key zone began. The key zone started for London with this candle. So what is the swing point before the key zone? This is the swing point before the key zone. There's a swing point before the key zone. This is the point. This is swing low. We call this one swing low. This is the swing low before the key zone. Swing low in the sense that we have this candle. Are you seeing this candle as a bearish candle that closed, indicating a bullish reversal, forming another block? Now we now have the second candle close bullish, the third candle close bullish, closing above the bearish candle that was used as another block. So therefore, this is a valid swing point, a swing low, a valid swing low. So what will I do? I will come and mark my 5 minutes valid swing low. Then I will also look at the swing high here. I'll come and mark the high. If you are confused with this one, you can use this one. If you are confused with this, you can use this one, because this is also a valid swing point. Now, the essence of this is this. We have this as a 5 minutes range. We have from this point where we have this to this as the daily range. Let me change the colors. Let me change the daily to blue. So the blue, this is our daily range, while this is our 5 minutes range. Swing low, swing high. Now, if we are to take this order today, the first thing we are to consider is the daily range. A break above this daily range is a confirmed strong bullish momentum. A break below this daily range is a confirmed strong bearish momentum. But we are going to use the 5 minutes to look for a sniper entry so that we can enter early and also exit early. That is the essence of this swing point. Swing high, swing low. It's a valid swing high, it's a valid swing low. Both are valid. Now, how are we going to take our entry with 5 minutes? Conservative, allow price to break the swing high, the recent swing high before the key zone. Allow price to break it and retest it. Then you take your buy. Then your stop loss has to be below this daily swing, daily range, the low of the previous day, rather, sorry, the low of the previous day. This is the Friday low. Allow price to use it as your stop loss. Now, aggressive, as soon as price break, you can enter, knowing fully well that. Hello? Can you hear me?
Hi.
Yes, sir. We
Okay,
can hear you.
Yes, sir.
conservative entry using the 5 minutes range is enter after a break and a retest. This is a break, this is a retest. Then you enter. But aggressive, you can enter from here, knowing fully well that price is not going to break the low of a Friday in most cases. Then you ride it up to this level. Now, where you are going to have a strong confirmation to add a second position is after the high of the previous day, which is Friday, is broken. Then you cannot add another position. Then you ride it to New York. That is a simple way of using a key point and a key zone, whatever. Now, if you are confused, you can use this to help yourself. Exponential moving average. $21. Did you see the moving average?
Yes, sir.
Okay, so now you see that aggressive you enter here, you can see that you have fully broken the moving average. Then conservative, you break, you retest, you break again before you enter. So in case you are confused, use the moving average to redirect your step. Then it will be easy for you. You need to practice this thing over and over and over and over and master it. Thank you. Any question? Any question?
Good evening, sir.
Good evening.
Yes, sir. My question is, after the retest, do we need to look at any candle at all before we enter?
That
Or
is where experience has a role to play. For example, after the test here, this is the break, this is the retest, and you see this candle like this, you are not supposed to jump into a buy order with this candle. You wait. That's why I said if you are confused, use the moving average. Allow price to also cross the moving average proper. So with this, I will know I am good to go. With this, I will know I'm good to go. So you discover that this candle close above the moving average and above the range. So I can enter from here. Did you get it now? Did you get it?
Yes, sir.
Okay. I hope it's clear.
But sir, it's clear, but sir, with this method, can one determine the period of take profit?
Yes. Oh, it's like you were not with us last time. Were you with us last Monday?
I came late, sir.
Okay, so I said we trade within the bosses. This is 4 hours, this is 4 hours. So if I enter here, I will continue and maximally exit here. Are you hearing me?
Yes, sir. Yes, sir.
Then I will exit here. So let's assume I entered here, sir, and I come to this point. I would have made good money. Let's look what it has given so that we know if the pips are much. Okay, I enter here. Came to this point. Very clean movement. That's around how many people now? That's around 86 people. Is that not a good move? Eh?
A good move, sir.
Even before that point, even before here, just at this level, that's a good move. So we trade within the buses. 4 hours London, 4 hour New York. So any other question? Hello? Hello?
Yeah, we can see.
you. Questions, so that we can handle. That means we have all gotten it very clear now. Eh?
Yes,
I think
sir.
you have done an excellent job explaining it very well.
Today, Abi, is better
Yes.
than the other days. So
Yeah.
with this, you keep collecting pips steady. If you follow the, the instruction, you always collect pip. I assure you that for every 10 setup, you are supposed to get 8, or maybe minimum 7 to follow this simple instruction. So, Oga Jeremy, you have worked on risk management, psychology, and all of those ones. Eh? Thank you
Yes,
very
sir.
much. You are doing a good job. Oh. When I come to Lagos this time, I must meet you. Sure, you are in Lagos.
Yes, I am.
I come to Lagos this time, I must visit my Oga.
Wonderful. We'll arrange something.
It's all right now. So we can always drop our questions in the chat group so that we'll be responding to them, and, you know, helping ourselves to get better. Hmm?
Yes,
So the
sir.
moving average will help us very well. There's a research, one of my friends in the US, a Black American kid, and he discovered that he tried hundreds of moving average, and he discovered that this 21 EMA tends to be more accurate than other ones. So since then, we use it to do some confirmation, and he's trying the 21 exponential moving average. So that's it. In the absence of any other question, over to Jeremy so that.
Wonderful. Thank you so very much. We are very, very grateful. I mean, the last 4 weeks, you have been taking us through various aspects of trading and helping us with psychology and entries and strategy. And you've gone over it over and over and over again. So our people, I'm sure they are well fortified. And I'm sure they are well ready for those who want to use this process to continue to use that. And thankfully, it's also recorded, so it will be on the platform. We'll put it on the platform.
Oh, okay, that's good. So that we can go through it again.
Yes.
We are doing a very good job. At least
Wonderful.
every member of the BBC need to buy you a bottle of wine.
Yeah.
It's not easy to coordinate all these things.
Yes. So, well, we thank God. Thank you so very much. You shared from your depth of wisdom over 18 years. So it's not easy. If you go outside, I'm talking to our people, our fellow people now. If you go outside, these things you have just seen here now, you will pay heavily for it. But he has shared.
You pay big money. This thing I shared now, this strategy, if you follow, you always kill and eat. You always kill and eat. You are just seeing, you can see how the market move. exactly the way you see the movement, stress-free, you kill and eat. It's just that you have to be patient. So now another thing is that when you come to the daily candle, always watch out for clean candles. That's what I want to point our attention to. You see how clean. So today, GPUSD gave A plus setup. A plus. This is where people used to load. You load your account with the heavy load because this is A plus. Jeremy, is this not A plus?
Walai, A plus plus.
This is A plus. From here you load and get like 80 to 90p. Then you are okay. You can even get your weekly target from only this point. So now, coming to use this strategy, always watch out for clean candles. Clean candles. What do I mean by clean candles? Is every candle that you trade on? If you are not experienced, avoid these candles. This is not a clean candle. These are clean candles. These are clean candles. These are clean candles. But this is not a clean candle. You understand?
Exactly.
So avoid candles that are not clean. But if you are experienced, you can trade them. But if you are not experienced, watch out for only clean candles. This is a clean candle. The move continues without deception. This is also a clean candle. This is a clean candle. So
Wonderful.
These
Thank you so very much.
These are not clean. These are not clean candles. Avoid them. Avoid them. You cannot tell me candle close like this and you are drawing this range to use to trade. Don't try it. Avoid all these candles. These are not clean candles. These are clean candles. Trade only the clean ones so that you don't get stuck. Trade only the clean ones. This is a clean candle. This is a clean candle. So that is what you should put at the back of your mind. Then I want to show us something. The Euro JPY. You mentioned Euro JPY. There's something I want to show us. Euro JPY, I think I traded it on Friday. And I wanted to buy. But I discovered that it has been on a very funny daily range that is trapping people for a very long time. Let me bring it out now so that you see it. Okay. I think that was what happened to you today too, Jeremy.
Yes.
That was what happened to you today. That's the reason why I said avoid candles that are not clean. So let me show you something. You see this candle. This was the last clean candle with Euro JPY. This is not the clean candle. This is not the clean one. All these ones, they are not clean candle. You see them?
Yes, sir.
All these candles, they are not clean. So what is happening is that the market is trading inside a particular daily candle. And what is that candle? Is this candle, the last clean candle. The market has been trading inside that candle for days. You can see that 1, 2, 3, 4, 5, 6, 7. 7 good days. The market traded inside this candle. So all through this period, it kept trapping people, So I saw the break. I marked this thing about, let's say, when price was around here. hoping that it will break with this candle and break the daily range, but it didn't. So I kept the markings like that. So on Friday, I discovered that price broke through. So I bought from here and I took some profit. So today I was waiting for price to retest and continue. But look at what happened. So this is Monday manipulation. You know, many people don't trade on Monday. Many people don't trade on Monday because of manipulation. Clear market direction will come on Tuesday. For example, now, this candle, if this candle close below this candle, it means that this market is going to reverse. If price come to this point now, it means market, if we have this candle close here, it means price is going to reverse. But if it does not close, then we will need to wash out to see that price trade above this range again. This is the trap. This is the trap. So we need to wait for price to come above this range before we can know that we are buying Euro JPY. Jeremy, you get it now?
Yes, so
So that was the trap that you entered today. So market has been inside
indeed.
this candle for 7 days. Oh, dear. So it's all right. Thank you.
Wonderful. Thank you so very much. And thank you all for attending today. So we'll continue our normal classes next week as well. Same time.
Okay. Well, I will try to be joining so that once I can also be contributing. I'll try.
Yes, wonderful. Wonderful.
Yeah.
Good. So thank you also very much. We'll put the recording up as soon as it's ready, and then you can go over it. And if you have any questions, just put it either. You can do a direct message to Billionaire Kelvin, or put it on the chats, and then send it to him. Yes, on the platform. Yes, and he's very willing to give a response. So thank you again, Billionaire Kelvin, for sharing a lot of your wisdom with us. I do trust that our people too have learned a lot and have taken a lot of, gleaned a lot of wisdom from this. So we look forward to another time as well. Thank you also very much and have a very good evening.
And you too.